Hello, everyone. This is Jim Lucy, Editor-in-Chief for Electrical Wholesaling and Electrical Marketing, with episode number 106 of today's Electrical Economy podcast series sponsored by Champion Fiberglass. Champion began producing epoxy fiberglass conduit and fittings in 1988, and in 1989 developed the first conduit from epoxy resins that had flame resistance and low smoke characteristics. This met the most stringent code and specifications. Today's podcast will be taking a look at the results of the Electrical Wholesaling Vertical Research Partners Survey for the third quarter of 2024 on the business conditions in the electrical market. We'll also be hitting the highlights from Electrical Marketing's most recent Electrical Price Index. As we do in every episode, we'll also be looking at 5 important weekly economic indicators: initial unemployment claims at the state level, rail freight car traffic, the Baker Hughes rig count, oil prices, and copper prices. And thanks again to the folks from Champion Fiberglass for sponsoring this podcast series this year, as well as going back over 100 episodes to 2020. For the week ending September the 28th, the advanced figure for seasonally adjusted initial claims was 225,000. That is an increase of 6,000 from the previous week's revised level. The 4-week moving average was 224,250. The U.S. unemployment rate dropped to 4.1% in September. 6 states saw their unemployment claims drop by more than 1,000 claims. These states are Michigan, whose claims were down 7,812, now standing at 8,357. Florida saw a decrease in claims of 3,428, total claims now standing at 6,128. Ohio saw a decrease in claims to 2,532, claims now standing at 700,334. North Carolina's claims were down 2,404. Claims now standing at 9,251. Indiana claims down 2,161. Advanced initial claims following the week of October the 12th, is 3,749. And Kentucky, change of 1,470 claims for the week ending October the 12th, claims standing at 1,963. Only 3 states had claims increase of more than 1,000. They are Georgia, claims up 3,108 to 7,981. New York, with claims up 2,455, claims sitting at 14,989. And Pennsylvania up 1,294, claims now standing at 11,098 through the week ending October the 12th. An interesting leading economic indicator for the overall U.S. economy is freight rail traffic. It measures the amount of raw materials and finished goods being shipped by rail. The best source for this data is the American Association of Railroads, or AAR, which publishes this data weekly. Freight traffic continues to do pretty well this year. In the most recent week, total U.S. weekly rail traffic was 505,033 carloads and intermodal units. That is up 2.6% compared with the same week last year. For the first 41 weeks of 2024, total combined U.S. traffic was 19,674,865 carloads and intermodal units. That is an increase of 3.1% compared to this time last year. Most of the individual freight rail traffic categories continue to show healthy increases year to date over this time last year. Petroleum and petroleum products were up 10% year to date. Grain was up 9.6%. Total intermodal units were up 9.1% compared to this time last year. And as has been the case for most of this year, coal saw the biggest declines as shipments were down 14.2%. Smaller declines for non-metallic minerals down 7.1%, and metallic ores and minerals down 2.9%. If you track the oil market, you're probably familiar with the Baker Hughes rig count, which tracks the oil and gas rigs operating. This data is available by state, by basin, and nationally at www.rigcount.bakerhughes.com. This slide gives you a good idea of the largest oil and gas deposits. It really gives you a sense of just how many of these large oil plays are in Texas and Oklahoma and parts of New Mexico, and how big an area the Marcellus gas region covers in Pennsylvania, Ohio, and parts of West Virginia. It's been a pretty quiet 2 weeks on the Baker Hughes rig count data front. No real dramatic changes in the data. Nationally, total operating oil and gas rigs were down by 1, and these top line numbers are off 6.3% compared to this time last year. And that's actually a lower percentage decline, and it seems slowly but surely oil production is increasing. No state or basin saw a change of more than 2 rigs, and Texas, the nation's largest producer, was off just 2 rigs. Its rigs count sits 8.1% compared to this time last year. Oil prices are of particular interest right now. But while it's going on in the key oil producing region in the world, the Gulf, everything going on there with Israel and Iraq and the Gaza Strip. Also, concerns over the U.S. election and just a general little bit of uncertainty over the U.S. economy, which really does seem to be chugging along at a steady, if not spectacular, rate. The current price of WTI crude oil as of October the 21st is actually pretty decent, about $70.49. People were concerned that it was going to dip a bit further below $70, but it seems to be tracking fairly well at this moment. Economists like to call copper pricing Dr. Copper because it's the leading indicator for future economic activity since it's used in so many industries. The construction industry is actually among the leading markets for copper because of its use in wire and cable and copper plumbing pipe. Copper prices actually took a fairly good hit over the past 2 weeks and are down about 40 cents since we chatted on our last podcast. Currently, on Monday, the October 21st, copper prices on the COMEX are $4.44 per pound. It's still well over the year-to-date price, the average price being $4.24. So we'll track that pretty closely, but I don't think anyone's expecting any really dramatic plunges or anything like that. It just happens to have been, it's a very cyclical, very volatile metal for sure, and it did drop fairly significantly over the past 2 weeks. Electrical Wholesaling has been doing a quarterly survey with vertical research partners over the past 4 years. And in that survey, it's become a great tool to get a read on business conditions in the electrical market. We survey distributors on their take for quarterly changes in sales volume and pricing. The data is broken out by type of distributor, specifically electrical, utility, and automation distributors. We'll be offering a few highlights of the data in this podcast, but if you want to see the whole report, it's available as part of a $99 annual subscription to Electrical Marketing Newsletter. You can also get a copy of the report by answering a quick online survey each quarter to offer some of your thoughts on which way prices are heading and also which way revenues are heading. If you're interested in getting involved with the survey or in subscribing to Electrical Marketing, just email me at jlucy@endeavorb2b.com. Some steady, if unspectacular growth continues to be the name of the game for electrical distributors who have answered the survey. In this particular quarter, they're looking for volume increase of 1.4%. That's actually down a bit from their hopes of getting a 3.1% increase in the second quarter of 2024. On the pricing front, however, we've seen some pretty notable declines in which way prices are headed. For the third quarter, distributors were expecting a 0.1% increase, and that is actually down pretty significantly from the second quarter when they were looking at a 0.9% increase, and from some slightly earlier times when the first quarter, distributors were expecting a 1.2% increase for the quarter. They were expecting that same 1.2% increase in the fourth quarter of 2023. Along with giving us insight into distributors' thoughts on pricing trends and revenue trends, as well as digging pretty deep into the performance of publicly held electrical stocks, this survey also offers some pretty neat anecdotal comments from distributors and manufacturers on where they see the economy is going. I'm going to offer a bunch of them here so you kind of get a sense of what the survey base is thinking right now on the electrical business. One distributor said, we hope the September rate cut along with future cuts will lead to more demand. Said another, sales are slipping just a bit, pricing is increasing a bit, and industry levels are just about right. Another respondent said, cutting the rate will help, but still lots of uncertainty going forward. Another distributor also said that will lead to right sizing of inventory because of the slower demand. Another distributor, we expect pricing to remain steady throughout the remainder of the year. And another respondent, bidding and backlog still relatively strong. And we've heard this one before, certainly over the past couple of years, widespread data center strength. I thought some of the comments were actually kind of amusing, and said one person, after COVID, nobody knows what anything costs anymore. And someone else said, can't complain, interest rates are a plus. And another respondent said, elections always slow us down a bit. And we had a report that the definite trend of suppliers shifting production to Mexico, generally from Asia, short-term hiccups as that ramps. And then, we also had someone reporting on overall conditions in non-residential market. Non-resi soft, except data centers. Residential is flattish. Someone's expecting big stuff for data centers and said 2025, 2026 will be the biggest years ever for data centers. And said someone else commenting on the political climate, feels like everyone is hungover from an election that hasn't even happened yet. I mentioned that we saw a pretty decent price decline in the VRP-EW pricing data that we do quarterly. We're also seeing that same trend apparent in Electrical Marketing's monthly electrical price index data. Electrical Marketing publishes an index of trends for over 20 specific electrical categories. We get that data from the S&P Global Corporation. They analyze it for us using some figures going all the way back to 1990. So it's a great piece of research, and it's an absolute bargain to get for only as part of a $99 electrical marketing subscription. But let's see some of the highlights in the price changes going through September. On a monthly basis, Electrical Marketing's total index was actually went down a bit to 0.3%. There's only one product area that had gone up to any large degree, and that was just a 1.4% for switchgear. Panel boards and switches were up 0.9%, fuses up 0.3%, and wiring devices were up 0.2%. And a couple product categories that had some reasonably significant declines. Power wire and cable showed a 1.3% decline. Boxes showed a 1.2% decline, and pole line hardware showed a 1.2% decline. On a year-over-year basis, some of the changes are a bit more pronounced. Overall, total index is up 2.7% compared to last year. Quite a few electrical products are actually up over the total index amount. There was once a leading switchgear, which also led in the monthly increases, was also showing the largest year-to-year increase, up 8.8%. Fuses up 7.3%. Building wire and cable was up 6%. Transformers up 5.7%. And panel boards and switches up 5.6%. Circuit breakers 5.3% increase. Industrial controls had that same 5.3% increase. Biggest decliner was boxes. They were down 4.9% for the month, and pole line hardware down 4.5%. Metal content was the only other one showing any real big decrease, and this was actually pretty small, down 0.6%. Well, that wraps up our podcast for today. And again, thanks again to the folks from Champion Fiberglass for sponsoring the EW's Today's Electrical Economy podcast series for 2024, and for sponsoring over the past 4 years. That's over 100 episodes. Please give me a shout if you have questions on any of the data that we talked about today, or if you have questions or any other additional data that you want to see if we've been covering. Our next presentation will be on November the 4th, and until then, be happy, be healthy. Look forward to talking with you in 2 weeks.